caucus and the New Hampshire primary now behind us, our primary election season is in full swing in this year 2012. In this morning's U.S. Bank Economic 360, U.S. Bank Senior Portfolio Manager Mike Denneman is in to talk about the election and the economy. So with 2012 being an election year, this really kind of complicates an already fairly complex situation, doesn't it?
Absolutely. The market seemingly has quite a bit on its plate already. So just to put the election into that mix really adds to it. So it's important to remember it's a two-way street, though. So certainly the election is going to impact what happens with the economy and the markets. But on the flip side, it's going to be the markets and the economy having a large influence on how the election turns out.
All right, Mike, let's look at both sides of this coin. First of all, what does the election, what kind of an impact does that have on the economy?
Well, you can see that over time, patterns have formed based on how the presidential cycle is going. So we've seen that stocks typically perform best in the third year of a president's term, but pretty close on the heels is the fourth year or the election year. So that would seem to indicate that 2012 could be a pretty good year for the markets. But we can break that down even further and look within an election year. If we go quarter by quarter, what we find is that historically, again, and we look at the graphic here, you can see that the first portion of the year is really fairly lackluster. It's not until we get nearer to the election that stocks really start to take off. So the third quarter historically has been the strongest quarter in an election year, and then the fourth quarter has been pretty strong as well.
Isn't there a bit of uncertainty over the election among investors?
Absolutely.
Yeah.
Absolutely.
All right, let's look at the flip side. How does the economy then affect the election?
Sure, and obviously there's a lot of influence there, and I think perhaps even more so in 2012 with a lot of unanswered questions. So a couple of items that we're paying close attention to include unemployment, of course. Since World War II, no sitting president has been reelected in a year in which the unemployment rate has been rising. Well, we're all aware that unemployment is relatively high right now, but the trend has actually been for unemployment to be falling. So that would seem to indicate that the president would have an easier time being reelected this fall. On the other hand, another measure we watch closely is consumer confidence. No sitting president has been reelected when that measure has been below 90. Right now it stands at about 70, so that's well below that level of typical re-election. So that would seem to indicate that the president might have a more difficult time being elected. So really there's a lot going on out there right now. It's very exciting, and we're anxious to see how it plays out as we move closer to the election.
Yeah, I think exciting is a great term there, especially for investors, and of course we'll be watching that situation with you. Thank you, Mike.
Sure.